Today's show is brought to you by Vasion. You know print is one of the biggest drains on IT resources, but did you know there's an easy solution? Just eliminate print servers. They're resource-intensive and likely the bane of your IT team's existence. Vasion Print, formerly known as Printer Logic, lets you simplify infrastructure and maximize resources by replacing print servers with direct IP serverless print. Reduce attack surfaces and secure your environment while still enjoying cloud-native flexibility that easily supports a hybrid workforce. Less complexity, less headaches, and less time wasted. And with built-in AI and automations, it's a solution that just works. See for yourself by scheduling a demo at vasion.com. That's VASION.com.
Cloudcast Media presents from the massive studios in Raleigh, North Carolina. This is the Cloudcast with Aaron Delp and Brian Gracely, bringing you the best of cloud computing from around the world.
Good morning, good evening, wherever you are, and welcome back to the Cloudcast. We are coming to you live from the massive Cloudcast studios here in Raleigh, North Carolina. Hope everybody is doing well. Another weekend perspective, and there's kind of an old saying that we often say around technology. We actually probably say it around a lot of things, but we talk about it in technology. Is that oftentimes change moves very slow, and then one day it just starts moving very quickly. And what I want to kind of dig into today a little bit is just one of the things that we've been kind of transitioning with this show, or even struggling with on this show, maybe not just as a weekend perspective, but as the show in general. And I know you've heard this throughout a number of the cloud news of the cloud news of the month, and where we're kind of combining AI and cloud is, so much of the conversation these days feels like it is AI centric, whether it's even infrastructure level stuff like GPUs and other things, but it feels like it's very AI centric and very less about kind of the cloud that we've talked about for the last 15 years or so. And I think we've kind of been trying to rationalize that. Why is that the case? What's going on? Is it just a market transition? Is it whatever it might be? And I kind of want to dig into a little bit today. Just it does feel like just even within the last couple of months, we are starting to see this sort of change from kind of the world that we've known for the last 15 years or so. The big market players, their place in the market, their size and power and success in the market is starting to change. And I kind of want to dig into that. Let's do that right after the break. Is Microsoft Unified Support busting your IT budget? Well, you're not alone. US Cloud is the global leader in third-party Microsoft enterprise support, and they're helping enterprises slash cost by 30 to 50% versus Microsoft Unified, all while getting faster response times from domestic engineers. No offshoring, no long waits, just expert support you can count on 24/7, 365. Trusted by 50 of the Fortune 500 companies and offering senior-level engineers with an average of 14 years experience with Microsoft technologies, US Cloud is the smarter alternative for premium Microsoft support without the premium price. Ready to make the switch? Book a call at uscloud.com to get started today. That's uscloud.com. And we're back. And as I mentioned at the top of the show, I want to dive in a little bit to kind of this rapid change that seems to be happening. And again, nothing is sort of rapid. Everything takes a little bit of time. But let me begin with a couple basic real concepts. Like I said, we've been doing this show for nearly 15 years now. And something that's kind of been interesting to us for a while is we've obviously been tracking the growth of AWS and then of Azure and Google Cloud and kind of the dynamics of those three and hybrid cloud and the cloud providers. They're the companies that were competitive with AWS and Azure and Google. Again, whether those were big on-premises companies, it could be an Oracle, an IBM, a VMware, Red Hat, a Cisco, an HP. Any number of companies that had been fairly large when data centers were the big deal. And then the other piece that, tracking the dynamics of who's winning, who's in second, who's in third, how do we keep track of that stuff? How fast are they growing? All those sort of dynamics. And then the other piece of it that was always sort of interesting to watch was, those businesses as they began to grow, at least as best we could tell, where they were broken out appropriately in quarterly earnings and when there was, reasonable transparency of their successes or failures within the marketplace. It was always very, very interesting to sort of watch the amount of profitability they had, hence the amount of cash that was generated by those businesses. And then ultimately what the parent company of those, whether it was Amazon or Alphabet or Microsoft was doing with those really kind of oversized returns and kind of oversized war chests of cash that were being kind of stockpiled. And again, during the cloud days, it was, they're growing very fast. They must be reinvesting in their data centers and so forth. And we would get to see those sort of CapEx numbers broken out, and those were great. And again, you weren't exactly sure if all the CapEx was always specific to those specific businesses, or, in the case of a Google or Microsoft or an Amazon, where, you had huge other investments in other businesses, whether it was, retail or advertisements or, gaming or whatever it might have been, how much of that was specific to sort of the cloud doing kind of IT tasks, applications, infrastructures, the stuff that we tend to talk about in the show. But I think one of the things that kind of happens over time is we get this perspective that the market is going to be the market for forever. Right. And we inherently know this because, we've watched technology trends happen over time. We've got, we've seen, even if we're only studying it, if we didn't necessarily live through it, we've seen the transition from, mainframe to mini computer to PC to, networks, networking connected all sorts of things to wireless, to mobile, to, cloud and all those sort of things. And we've seen those transitions happen, but the transitions feel like they take quite a while, right? Those eras and those transitions are typically 10, 15, 20 years, sometimes more than 20 years. And then within those windows of time, we forget that, the previous, in many cases, the previous wave, the previous generation of the leading companies wasn't necessarily the same companies, right? So, if we were to sort of lay it out, it was IBM in mainframe and mini, became Microsoft and Intel in PC, it became people like Cisco and others in network. It became, in early web, you had IBM make a comeback, but then you still had companies like Netscape and the browser companies. But Microsoft sort of came back in a different way in that. And then mobile came along and it became Apple and it became Google. Ads in the web and the internet, was Google and Facebook and so it wasn't necessarily always the same company. Obviously, with cloud, it was Amazon came along and those types of things. And now I think we're seeing this interesting thing. I think if we went back, a couple of years, let's say we went back, I'm going to use sort of a couple of data points. Or if we went back to 2021, for example, and we said, hey, where does the cloud industry sit right now? We would sort of say, well, if we did it purely by revenues, AWS was about 62 billion, Azure was around 60 billion, again, give or take, because their numbers are always a little bit cluttered with how they do their accounting, but they were give or take neck and neck in terms of revenues. Even if Azure was sort of half that number, let's say they were 40 billion or 35 billion or something. And then Google Cloud at the time was 19 billion, right? So 60-ish, 60 plus-ish for Amazon, 35 to 60-ish for Azure, and Google was, a third of those at about $20 billion, right? And if we looked at those, we would have sort of gone, okay, well, those numbers have sort of tracked again, we put it in 2021 timeframes. Those numbers have tracked more or less for the last 10 years, or like 6, 7 years for those three companies. And there wasn't anything that necessarily jumped out and said, this is going to change. We had sort of come to the conclusion that like, this was sort of the way it was going to be. And maybe over time, Aaron always liked to talk about how he thought over time, Azure was going to overtake Microsoft, or Azure and Microsoft are going to overtake Amazon just because, Microsoft has been very, very good at sort of staying in markets for a very long time, letting their machine take over. It starts to churn through. They've got enterprise customers. They grow. They build upon, bundles and so forth. And so we all kind of said, yeah, that seems like kind of where things are. And again, if I put this in the 2021 timeframe, AI is really not part of the conversation, right? It is a component that all three of those deal with. NVIDIA, the company, wasn't something that was, sort of top of mind for anybody. I should go back and look at what their run rate was. If we fast forward even to, so let's put a stake in the ground for that. Then if we were to fast forward to, let's say, the end of 2023, right? So by that time, 2023, ChatGPT was out. I want to say, I can't remember if it was 2022, 2023 off the top of my head. I can look it up. I'll find it. But by end of 2023, ChatGPT was out. It had made a huge thing. Microsoft had previously made a big investment in OpenAI and were introducing those models into everything they did, whether it was copilots or whether it was ChatGPT or, integration with Office and all that stuff. And I remember we distinctly had a show, and I can't remember if it was just Aaron and I, or it was myself and Aaron and Brandon Witchard or whoever it was. And we sort of said, it feels like the dynamics are beginning to change a little bit in that, at least in this new nascent Gen AI space, again, end of 2023, Microsoft made this great early bet on OpenAI, essentially, the equivalent of what felt like an acquisition, because they were really the only ones who had direct access. They were running it in their cloud. Amazon had gone through the transition from Andy Jassy being in charge to Adam Selipsky being in charge. They had made a CEO transition because Amazon, at a larger company, had made a CEO transition from Jeff Bezos to Andy Jassy. And, it felt like even just the flip of those two felt like they were very much going in different directions. But at the same time, AWS wasn't necessarily like, their revenues hadn't dropped below. They weren't number two in revenues and so forth. But it felt like we were beginning to see some of that. And then we were beginning to see Google start to actually had gone through, a 7, 8, 9 year period with Thomas Kurian taking over of being wildly behind, but also wildly unprofitable. And in end of 2023, they began turning a profit. And so, we went from, a decade plus of what felt like pretty steady state, just growth for these companies to we were beginning to see this inflection point. And the inflection point was super amplified by this thing that was kind of outside of all of their control. I mean, Microsoft had nothing to do with OpenAI finally launching ChatGPT and kind of putting generative AI into the hands of everybody in the world and making it as simple as possible to actually experience this technology that had been, out there for a number of years, really since 2017, 2018, but doing that. We think about that, and if we kind of go back, so again, let's put all these things in perspective. So 2021, we laid out those numbers. 2023, it was beginning to feel like, at least in this, nascent niche at the time, section of AI called generative AI, Microsoft may have, kind of played a better strategy, played their hand better. Google didn't necessarily seem like they had a play at that point. They should have had a play. They were very, very good at AI from just a data perspective. They integrate in their products. They obviously had massive investments around GPUs and even TPUs and so forth. But we hadn't seen, kind of the Cambrian explosion of AI sort of take off. So, you have that. You fast forward to 2025, and if we just look at the numbers, they've all basically doubled where they were, right? So, they've been through the pandemic. This AI thing has taken off. AWS is up to 130 billion. Azure's at 110 billion, give or take. GCP is actually gone faster. They're at 50 billion. And, on 2025 as of now, so we are in the middle of the year, but this is sort of revenue run rate. So again, just extrapolate out times 4. But what's really interesting to me is, we go back to that early thing of, for a long time, we tend to think that the market is going to sort of stay where it is because we've seen the dynamics of what happens. And, once you get to a certain size, buying patterns sort of normalize out and sort of technology evolution sort of plays itself out. We know how fast new capabilities are coming along. And this inflection point happens. And then the second piece that I was going to mention is, we were wondering, like, what are they doing hoarding all this cash? Or, they're generating all this cash. What are they doing with all this cash, right? And then we fast forward and we're now in a very interesting time. So AWS, since the pandemic started, AWS is now on their third CEO. So Andy Jassy continued, Adam Selipsky, now Matt Garman. So, they've gone through some transition, and it seems evident by kind of everything that we saw that AI was the catalyst for doing that. People still sort of question AWS's AI strategy. And I think part of that's because they took a strategy that they had used for cloud in terms of, we are going to, continue to we're going to allow you to be builders. We're going to give you building blocks. We're going to give you access to all these sort of models. But what they didn't have, and what they still kind of don't have, is they never really had an application portfolio. And they never really gave you a distinct starting point. Bedrock is interesting and some of their models are interesting. And I know they've talked about this, but it does feel like they are still distinctly searching for what their AI strategy is. And again, they laid out their AI strategy kind of as a continuation of their cloud strategy. And the market kind of said, that doesn't seem to be the way we're going to adopt AI, at least for right now. And again, all this stuff can sort of change, but at least for the last couple of years, they haven't had their ChatGPT moment. They haven't had their even DeepSeek moment in which they really have changed the economics. They've sort of taken their cloud strategy of, primitives, and we're going to go after builders, and we're going to give you kind of a little bit of everything to do it. And I think what they may have missed is, like, what was the starting point? What does Amazon expect the starting point to be for what they do? Whereas I think if we contrast that against Microsoft, and Microsoft had their access to OpenAI, the first access was essentially ChatGPT and their association with that. So Microsoft didn't invent that, but then they immediately kind of came out and said, we're going to and again, how tied this was to the GPT models, I think it is, but they basically came out and said, your starting point should be Copilot. And that means that if you are a software developer, your starting point should be GitHub Copilot. And if you are a knowledge worker, your starting point should be either some sort of access to ChatGPT or Copilot embedded within, the Office 365 suite or whatever it might be. But they had a starting point. Then we look at that, and then we look at sort of Google, and Google had some stops and starts, and they had some weird models. They should have been further along. None of us could really understand why they're farther behind than certain things, because they were there for generative AI. But they're starting to come together. They've started to embed it into the tools they have. They've made Gemini very ubiquitous within just itself as a chat tool. It's become more robust. They've done a better job at making the coding assistant better, but they've embedded it within the tools that you use, and in some cases better than others, right? So it's in Gmail, it's in Docs. There's some interesting things out there with like Notebook LLM, all those sort of things. But their uncertainty is, the company itself is under deep U.S. Department of Justice regulation. There is all sorts of speculation that they may have to break up in one way or another, whether that is, through YouTube or through some other aspect of their ads. And so, we start to get into these situations, and I should have mentioned even Azure, for all that we praised them in 2023, we're now in 2025. And, there's lots of questions about, will the partnership there continue? How much does OpenAI trying to break away? Where are they trying to do it? We've already seen them start to put workloads onto other clouds. It feels like they're very much hedging their bet. They are trying to restructure their legal structure so that they can, get into having more access to money, more access to markets and so forth. And so I think the point of all this stuff is we get ourselves into these situations in which we become very comfortable with the stability of markets, with what appears to be the trajectory of markets. And even for the companies that have the largest amounts of money, in which you would think they could naturally build themselves moats, to be able to do this, we are seeing, innovation, things like OpenAI, ChatGPT, Anthropic, Claude, a whole bunch of other things, Perplexity, start to, disrupt those things. I think, having covered this space for 15 plus years, AWS as a cloud provider was very disruptive to the IT industry. And, I think every conversation we had from about 2007 to about 2015 was about AWS and how companies were competing with that and how companies were adopting it and what did cloud really mean and what skills did you have to have and so forth. 7 or 8 year period. All this stuff that I just talked about over the last couple of years has been a 2-year period, more or less. It's basically, zero is the launch of ChatGPT. We're about 2.5 years into that. And I think if we think about the cloud, the dynamics of the cloud, right? Forget about the GPUs and so forth, but the dynamics of where are the cloud providers today? Do they look like where they were in 2021 or even 2023? The level of kind of uncertainty while they still grow, the level of uncertainty while they try and figure out how much of those giant cash hoards they should invest in people, in acquisitions, in whatever, is greater than we've seen in a decade and a half, right? And I lay out all this stuff just to point out that, I go back to the sort of thing I said at the beginning of the show, right? Things change slowly for a long time, and then they change really fast. And I think we are in the stage of things are changing really, really fast. And whether we call the context of that cloud or we call the context of that AI, it is changing incredibly fast. I was listening to a different podcast, a podcast called BG2, which has nothing to do with Brian Gracely. It's two guys whose initials are PG. Interesting podcast. I'll put a link in the show notes. But they were talking about a presentation from an event called East Meets West, which I believe is sort of a kind of a meeting together of investors and government, folks that focus on policy and VCs and startups and so forth. Anyways, it's an event that goes on. But one of the companies that puts it on, put together a presentation, and I'll put a link in the show note. It's called East Meets West 2025. You can see it in there. But there was a very, very interesting one slide. There's a lot of interesting slides in there. I recommend people go take a look at it. But there's a lot of interesting slides. But there was one slide that sort of jumped out at me. And again, I've been trying to kind of wrap my head around like what's a way to identify what this change might look like. And again, we can, the perspective from the previous kind of map of what the cloud world looks like was AWS was always up and to the right. again, kind of indicative of that Gartner Magic Quadrant for cloud that we've all looked at a million times. Andy Jassy has showed us it. Every single reInvent, where they are in the marketplace, they are up and to the right. And you sort of, you got used to that, and you said, okay, well, that's cloud, and I'm sure the next generation will build upon that. But what was really interesting was there's a slide in there that lays out the big cloud providers, the hyperscalers, and that's to the left, and it lays out their market share. And, Amazon's got about 44% and Microsoft's got about 30% or Google's got about 20%. And, that made up about 100%. And then to the right of that, they have a graph or a chart, kind of a block that laid out the percentage of where NVIDIA's GPUs were going. And again, we know that for the most part, NVIDIA, while they've done extremely well, they've probably got 7 or 8 big customers, maybe a few more, but for the most part, kind of 7 or 8 big customers, very similar to the way that Intel used to have 7 or 8 big customers when the cloud first got started. And what was interesting about this, and I'll leave it at this as a way of sort of saying it feels like the change is going to start to happen very quickly, was it basically said, Google's got 20% market share in the cloud. They own about 20% of the GPUs that NVIDIA sold, which was interesting because they've obviously made other big investments around TPUs and their own hardware and so forth. But for the most part, they had invested at the level in which they currently were. Microsoft had about 30% value or revenues and sort of market value, and they owned about 30% of the GPUs of NVIDIA, that NVIDIA had sold. And the most interesting part was AWS or Azure had, AWS or Amazon had 44% market share revenue in cloud, and yet they only had bought 20% of the GPUs from NVIDIA. And so what that basically sort of laid out was kind of asking 2 questions. Number one, why hadn't they bought at that higher level? And I think the answer to that they've talked about for quite a while is they've been building their own chips. And again, that builds upon the idea, kind of similar to what they did in the cloud, in that over time, they started with Intel chips and AMD chips and sort of x86, and eventually began moving to ARM. And they've been trying to move more and more workloads over to ARM. They see them as a better, cost performance, price performance, performance from a power perspective, and that all makes sense. But it also, we've also seen them invest a lot in their own chips, in Trainium and Inferium, whatever, all the, in inferencing chips and training chips and so forth that weren't Intel GPUs. And I think what's interesting is to look at that and go, okay, number one, they've opened up the market to 20% of GPUs that could go to somebody else. And whether that was driven by NVIDIA trying to, diversify the market, so that it wasn't one dominant player, or whether that was AWS, missing the opportunity to say, should we invest in our own chips versus sort of buy the latest and greatest? I think it's indicative of a couple of things. One, if nothing else, it just sort of shows if you're measuring the future based on, kind of where the latest and greatest technology is, Amazon appears to not necessarily be aligned to that. Right? And again, you can take that as one way or the other, but they haven't been buying from the kind of cutting edge of the technology at a level that's 50% less than what they had previously been doing in terms of their revenue. So that's interesting. It's a interesting thing of, can you take the same strategy that you had in a previous generation and just continue to expand it into a new generation, especially if you are the leader versus a follower who's trying to keep up or trying to get into a space. That's going to be interesting to follow, because if we think about that, essentially you could argue that even though the alignment of revenues, and this will be better if you start to look at the chart, the alignment of revenues would sort of go, okay, it feels like Google aligned to what they did, Microsoft aligned to what they did. But it also says that those two aligned faster than AWS did. And that would, potentially lead itself to, you could draw a conclusion that that's going to help them leapfrog the 10 plus year deficit they've had to AWS over the last few years. And then, it's opened up the market to, the 20% that Amazon could have bought, at the level they were at, to new entrants, whether that is CoreWeave, whether that is NVIDIA themselves, whether that is, whoever it might be. And it opens them up to the possibility that because those GPUs became available, the companies that are owning them are the source, the hoster of the builders that will be the next big things that may not necessarily happen or start on AWS. So anyways, I thought it was an interesting, what we've seen over the last 3 months, partially in terms of sort of the chaos of, kind of where everybody's strategy is going. And I think that's the natural churn that happens when we have major, major inflection points. And I haven't even talked about Meta and how much they're investing in this space, or Apple and how little they are seen to be investing in this space or have a plan in this space. We could do an entire show on, what's going on with Apple, but I think folks like Dithering and plenty of others do a great job of that. But I thought just kind of the dynamics of the chaos and churn that we're seeing from a strategy leadership perspective with the three cloud providers, and then kind of where their money is going and what that's doing to sort of impact their ability to deliver, first mover status, kind of first innovation status, or even new innovation status within the marketplace is very, very interesting and worth watching. But I think my takeaway from it is, like I said, we've been doing this for about 15 years. This is, you could argue like, hey, this has been going on for a little bit, a couple of years or whatever, but it feels like we're now beginning to see the clouds and the fog start to open up a little bit of like, where is this stuff beginning to go? And I think if nothing else, it's sort of telling us there is a very distinct possibility that the hierarchy and the kind of leadership levels and the, who's in first, second, third, fourth, and fifth, very much, could be changing. And it'll be interesting to watch, what are the secondary that come along with that, whether that's ecosystem alignment, standards definitions, where customers are investing their money, how customers are investing their money, all those sorts of things are happening. Anyways, I'll wrap up there. Yeah. Things are changing. Things are changing very, very fast. And if you are sitting there looking at the market or making your plans in the market in ways that you did 2 or 3 years ago, or just simply trying to follow the path that you did previously because it was successful 2 or 3 years ago or for the last 10 years, I think there are plenty of flashing red lights that would tell you that there is more risk in that approach than there have been in the last decade or so. So maybe potentially reevaluate or at least relook at what's going on in the marketplace in certain dynamics around that. So anyways, going to wrap that up. Thank you all for listening. Thanks for telling a friend. Thanks for helping us grow the show. Lots of stuff coming up, some new stuff that Aaron and I and some others are going to try and get into here relatively soon. But with that, I'll wrap it up. We'll talk next week.
Thank you for listening to The Cloudcast. Please visit thecloudcast.net to find more shows, show notes, videos, and everything social media.